Excellent. Hi, Raj. How are you?
Good, thank you, Nick. How are you?
Very well, sir. Good to see you again as
You
always.
too?
Hi, everyone who's joining us today. It's a pleasure to be joining us on this wonderful Wednesday morning. Looking forward to a session. We'll try and keep it to time, but I think this topic, Raj, and correct me if I'm wrong, but we could spend a whole day workshop on this topic just quietly and still not reach the end of it. But we'll give everyone a flavour for it as best we can.
Yeah, there's a lot there, but we'll try to get through it.
Right. Excellent.
Maybe just while we wait for everyone to join, if you can all just type the industry that you're in, might help us frame the conversation a little bit in the chat box. That would be useful. Thank you.
Yeah. It's lovely. Like we say, there's lots, and actually, if anyone, I'd encourage people to, if there are further questions or either things we didn't get quite enough time to cover today, or you want further information on any of it, or our thoughts, or just our musings on this, look, encourage you guys to drop us a line, reach out, because I think we've got our emails at the end, and happy to help, like we say, because it is certainly a hot topic, and it's something that, in my mind, it's such a game changer, and it's such a sort of easy one to change. Deliver such dramatic change in a business's operating process, and achieve it 0 days late, which is obviously our motto, but it's an easy one.
You can do everything perfectly right as a business, but if you don't get paid at the end of it seamlessly and easily, it creates
Absolutely. We've got a great spread, actually.
Yeah, I'm just looking at it now.
Yeah. I like the equine industry. My family historically in sort of involved with horses, show jumping. My parents and whatnot. Oh. Me, and no skill whatsoever. So I can't add anything truly for that. But I think it is a wonderful industry to be in, because who doesn't love being out in the outdoors with animals and the rest of it? It does certainly beat being indoors in front of the laptop. But we have to do what we've got to do. That's right. Cool. Excellent.
We'll just wait another minute and we'll get going.
Yeah, no worries. Everyone grab literally, as I was about to mention, everyone maybe grab a coffee. But Helen's joined us, who looks after coffees. Excellent, wonderful. Maybe we need to strike up a conversation and we can get some new coffee machines for our office. Yeah, I certainly could do with one at home. So, but yeah, like I say, grab a water, grab a coffee, and then we'll get underway shortly.
Okay.
Should we kick off?
We'll kick off. Welcome, everyone. Really nice to have you today. It's a nice day for, maybe not for being inside, but it's good to have everyone there. So what the topic for today's seminar, as you all know, is applying the learnings of BigTech to end late payments to make sure we get paid on time. And why do BigTech do it so well? And how can we apply that to your businesses or our businesses as a whole? So that's the topic. In terms of just housekeeping, questions, please type them in the chat. Between each section, we will try to address any questions. So please, we want to keep it open and conversational, and as much as possible between me and Nick, and between me and us and you. So please do add your questions as we go. Just a quick introduction. My name's Raj Kuckreja. I'm one of the co-founders at ezyCollect. I'm also a chartered accountant and a director of the company. My passion is small business and small and medium businesses, and really seeing it, working with people, and seeing the growth and where it ends up and where it takes people and their communities and their lifestyles and their worlds and their families. So that's sort of me. Nick, you want to do a quick intro?
Yeah, thanks, Raj. So CFO of ezyCollect, I joined about 6 months ago as we sort of ramp up towards sort of our IPO and we scale this great business that we've got. I guess I've worked across the gambit of within finance teams. So from starting my life over in the UK in big assets, managing, big, hard things, and then went and did some further study and flipped into tech, as people can do once you go through a sort of a master's program. And it was it gets to change the world. So, and I haven't left since then, and returned to Australia about 2-3 years ago, just scooted out before COVID hit, and joined a payments business over here. And like I say, with where we want to be sort of taking ezyCollect in the future, a big heavy focus on payments. It was a great marriage between myself and the business, and so here I am. So yeah, it's a great time, and we've got lots of things to deliver and do, and really honoured to be part of the company. So that's a bit about me.
Thanks, Nick. Nick's also got a deep experience in payments, which makes it exceptional to have this webinar today. So the agenda today is, firstly, we'll just sort of define what the problem is and what is 0 days late and why it's significant and why it's important. I think it's always best to start with the problem statements. What are the biggest changes in technology driving a lot of the changes that BigTech are implementing, and how are they approaching it? What are they doing differently that allows them to fund their businesses in phenomenal ways to grow so quickly? And how do we apply those learnings to your business? So we want to go through in that order. Very quickly, before we delve into what is 0 days late, just to state the problem. And most of you looking at industries are in B2B, but it's especially problematic in B2B businesses. It's messy, it's complicated. Payments is complicated. It's suppliers want to be paid on terms. Want to be paid on terms. There's predictable cash flow. We're after all these things, and there's no visibility between both yourself and your customers. Where are they in paying that bill? Which authorization level? What are they up to? What are the different issues that they're having in paying it? Where's the data flow? Where's the transparency? It causes disputes. It causes band-aid solutions. It makes inefficient processes. It's a big problem, and I think you all feel it. There's high DSO, so high day sales outstanding. You might have terms of 30 days, but you don't know if you're getting paid on that 30th day. It's hoping, maybe not. There's no predictability. It's hard for you to budget or use your cash flow. It's really based on trust and maybe people being available to make payments and things like that. It's costly and there's no visibility. That's where we're starting, and what we want to do is get to this, what we see it as a nirvana in ezyCollect, as a 0 days late, where everything is paid on time, on their due dates, and if not earlier. And we want to make sure you have the technology to achieve that, no different to what big technology companies do, and you'll see that through the seminar. So why is 0 days late important for small businesses and small and medium businesses? I mean, firstly, it's obvious. You've got a huge amount wrapped up in a balance sheet asset called accounts receivable. With interest rates rising, higher capital adequacy requirements from banks and obtaining loans, you want to free that up. You want to change that into cash, and small changes in that means you have access to that cash. That cash can be used to fund growth, fund working capital, fund a million different things. But accessing that in a speedier way means you have that money available to take your next step, as opposed to using all the other opportunity costs that come with it that you potentially miss out on.
Brilliant. I'll tell you this one. So thanks, Raj. Like we've all seen the heartbreaking news in the last couple of weeks, guys, around there's construction firms going insolvent. Ibis has just come out with this stat recently around this prediction that 9% of construction firms operating in today will go bankrupt in the next 12 months. So more than ever is it important for us to kind of really hone in and say, get those terms, get that transparency with our clients and customers and when payments coming in, and because cash is the lifeblood of any business. If you look at the stats from the RBA around insolvency, basically in the last 20 odd years, there was an average of 644 companies per year going insolvent, and in the pandemic period, I mean, we've all heard the news. This was down as low as 192. There was a peak, way back in about 2012 of 1,123 odd. Not on this graph, but you can see that those last few years we've had this artificially low number of insolvencies, and you only have to take the snapshot we've got on the right-hand side of the last 6 months, and that is escalating since a lot of those mechanisms are starting to be turned off, and companies are going insolvent. So, and we're still away from that sort of 20-year average of 644 odd companies. So it's only going to bite and get worse. Unfortunately, that we've got, there's this kind of concept around these sort of zombie companies who've been being kept alive during this period by those, all those measures, those pandemic measures, and it's potentially, unfortunately, only a matter of time for when some of those, go insolvent. So, there's another metric that kind of is a little bit of a lead indicator as well on some of this. It's actually also a harder measure that I haven't got the stats up on this graph though, but I guess it's around the appointments of insolvencies. And I think last year they did about 6,400 odd, so 6,000 odd, and they're predicting this year to only do about 6,500 odd appointments, and that's still well away from I guess their average, which is about 10,000, had been about 10,000 previously. And so you take that and you put that with the insolvency data, and you can only sort of start to draw a bow that sort of says that actually this is, we're still just on this precipice of where this this hugely potentially bad period of insolvency coming up. Like I say, I hate to be the bearer of bad news, but like that's it. And so what can you do? It's almost, what can businesses do to protect themselves from that and be able to, like we say, get paid and ensure they're getting paid when they say they are. And maybe something that leads in maybe to the next one, Raj. You're going to kind of cover customer relationship.
Yeah. So I mean, heading back, the period of free money is gone, and so that just is, and we need to accept that. That there's going to be higher cost of money, more insolvencies, and we need to get paid on time, like Nick was saying. And it leads into customer relationships. That this is easier than ever in the fact that providing trust and transparency is absolutely key here. We need to look at, sorry, let me try to get this right. We need to create less space for distrust and confusion. The visibility has to be there. That's why it's important, because if you have good customer relationships, you agree on your terms up front, you understand where each person sits. And this isn't necessarily driven by people relationships anymore. It's driven by data and that information and how you're going to pay and what the agreement is. Customers will reorder. It's important to have this understanding and agreement to see exactly where each person is or each party is. That will drive, and that's why 0 days late is so important. If you have an agreement to have this period done, and that will in itself drive results over time. So I think that's key.
Yeah, absolutely. That's a good point, Raj. And I would say, as we sort of jump in then sort of to, I guess, the main part of the topic today, we've got some great logos up there. We all probably recognize a lot of those, and they probably have very little issue with late payments. And what we want to try and understand is actually like how they achieved this nirvana, as we call it, in a way of getting paid with 0 days late. Many of those, as you probably all are acutely aware, because you probably use some of their services, you actually pay in advance. We even talk about Tesla. I don't know if anyone's jumped in on the Cybertruck, but people were paying up front before this thing was even built. That's probably some of that's due to the impeccable branding and the hype. But they're also behind the scenes, just for their day in, day out products. They're achieving payments and getting paid either upfront or on the money is being taken on the date that it's due. So before we sort of jump maybe into some more specific examples, Raj and I kind of came across something just the other day internally in our office, which is, I guess we thought would neatly represents kind of the old world potentially of payments and doing payments, and then sort of the new world. So Raj, we've drawn this out to kind of to help explain the point.
This covers sort of all firms. So simplifying the process pre-COVID. And just let's work straight into the example. We sent Brendan down to order some cakes for the company or someone's birthday. He thought, okay, well, I need to get an account because I don't have a payment approval. The cake shop said, yep, no issues. Here's a piece of paper. Fill out the piece of paper. He filled it out. He bought some cakes. He got an invoice. So it's still going on. He's picked up these cakes. We all celebrated. He's got an invoice. He sent it off to the finance administration, and that got passed on to Nick, for example. And Nick sat there and go, well, why have you spent $200 on cakes? That's ridiculous. So he thought, oh, well, you know what?
It was a hard one. They were great cakes, right?
Yeah.
I was torn. Yeah. I was torn. Yeah.
but he still knocked it back. And then in the meantime, Brendan and Nick and everyone's getting payment reminders. Please pay this invoice. The cake shops are completely annoyed with Brendan, if they're good mate, and saying, well, I haven't got paid for our $200. This is ridiculous. Finally, the invoice is approved. Even once it's approved, then the payment run happens on Thursdays. We get approval processes happen. We then we reconcile that back in our accounting system. A remittance is sent. Finally, the cake shop's really happy. We've got paid, and then we reorder. It's complicated, time-consuming. For $200 of cakes, I can't even think of the cost of people time involved in that. Much more than $200. It's ridiculous. It doesn't need to be that complicated, and technology has, thank goodness, saved it. So let's use Uber Eats as an example. We're talking about how BigTech are doing, and what are they changing, and what are the key points. If we think through the Uber Eats example, up front, there's an authority captured. So Brendan says, okay, I want to order some cakes for the company. He sets up an authority. He goes into Uber Eats and he goes, well, I have a virtual credit card or debit card, which the company's issued me up to $300. He puts that in there. He orders the cakes. He just clicks a few buttons on his phone. No need to go down, pick it up, decide what you want. Everyone has a bit of a look in the office and decide which cakes they want. Gets delivered, and the payment is made immediately. And on top of that, all those other problems around accounting, it's solved in the fact that the invoice is there, the data is there, the transparency is there, what was paid for is there, the approvals are agreed to initially upfront, but all of it's solved in like 1 minute, as opposed to all that wasted effort and hassle. What are the key points in simplifying it? I think it's important, and we're going to keep dealing with this. It's about having authorities, making sure that you have the ability to charge people what you agree, but it's also the trust. We trust the individuals making the order, trust the companies on Uber Eats because we feel like it's a big platform, they're not going to rip us off, but it's also transparency. We can see exactly what's ordered at all times. When was it done? Who did it? How was it done? And delivery's made, and everyone's sort of happy at the end of it. So it's 10 times simpler. And I think that's what we're going to see throughout this. So Nick,
yeah, and I was just going to say, you know, about that authority. You know, they're able to capture, they're able to kind of put a reserve on the cakes whilst that order's being, you know, to reserve that amount of money on that card, and they're able to say, all right, whilst we kind of wait for confirmation of that being delivered, we're holding a reserve of that cash. Once those cakes have been delivered, the payment is then sort of captured and it's released back to the merchant. And so there's never this doubt that the money is there and the money can be taken from the merchant or from the client, we say. And so it's, you know, that it's almost risk-free in terms of providing you know, these services, and it's just a seamless approach. You know, we talk a little bit about towards later about why is someone willing to hand over their credit cards as well. It's just that experience that Brendan went through to kind of, he added his card and it was done, and he was up and running within minutes. He had been authorized to kind of order this, and so it was, you know, that the whole experience end to end is a delight to go through, versus what we had, you know, with the old school process, which is it's just friction points everywhere. There's time lost. There's what, you know, and it's not a good experience for both those ordering and paying, and for the cake maker as well. So yeah, it's a lot to do. So thank you, Raj. Well, like I say, let's now dive into maybe some examples or some of the big changes that we've seen in PayTech recently. We've got sort of 4 things we've identified. I mean, like I say, there's many more, but in terms of how this sort of breaks down, if you want to try and group it up, it's sort of, what have we seen? So infrastructure, the first point there is around infrastructure, and the rate of change in the last decade, it's accelerated well beyond anything that's happened in the sort of the decades preceding that. And so we're going to talk a little bit about that, and sort of why that's the case and what's driving that. Similarly, the behaviors of both consumers and clients and customers has changed. You know, the expectations are rising. People want and now expect to be able to do everything more easily, instantaneously. And so when you're dealing with someone, there's an expectation now. It's not just, okay, I just take what I get given. And the experiences around payments like they're incredibly easy now, and that's that I sort of mentioned before around this frictionless sort of payment experience. If something's easy, people are likely to do it again, and they're if there's a level of trust built up, and it's there's no, should we say, barriers to going on and making further payments. So that experience around paying has to be as easy as possible, and that's how you kind of ensure that you get paid. And then the final one is around that, the sort of AR and AP processes working more closely together, and unifying that together and bringing it together really kind of caps all of this off. So that's what we're going to run through. So let's, maybe without further ado, let's dive into it. I've got some wonderful graphs here. I haven't created these. These I would hopefully be able to create something a little bit more beautiful than these. But these are the data. It tells the exact story. These come from the RBA, and in short, what we're looking at here is this continued growth of debit cards in the last couple of years. So credit cards have certainly plateaued, but credit cards continually march on. Now, some of that has been driven by the pandemic, but if we sort of look at sort of some of the youth coming through today, like at the moment, fewer than 7% of millennials use credit cards, and debit cards have grown, let's say, exponentially over the pandemic years. The banks issued something like 350,000 cards in 2021, more than they would otherwise, and a lot of that is being driven, like we say, that there's gaps being filled, and we'll talk a little bit more this in the next slide, but gaps being filled by fintechs. And they are working off the back of the debit card rails to realize these things. So, a bit like in our example before, we use some virtual card services of some of the brands that we're going to talk about, and that is all built off debit cards. It's a much safer way, and I guess as we moved into a more cashless society, again partly driven by the pandemic, debit cards is the closest thing we have akin to cash. If you take a look at the graph on the right hand top corner, this shows the usage of each of, I guess, our kind of payment types, our kind of classical payment types. The red dotted line is the decreasing usage of cash. Like I say, maybe the pandemic's just sort of put more nails in the coffin, perhaps, but it was definitely has been on the decline. As you see, debit cards is forever increasing. But interestingly enough, this little bottom right-hand corner, NPP, and we'll talk a little bit about that. But new payments platform is part of this infrastructure, and again, I'm going to talk. It's the underlying reworking of the payment rails behind the scenes to enable instantaneous payments. Effectively, will replace the old BEX rails in time. No longer will we be sort of waiting to, hey, I hope I get paid when I run that direct debit on that client's account, and hoping there's money there. 3 days later to find out there's not. You have instantaneous knowledge of that collection, whether it's failed or succeeded. But it's some really interesting stats, and I think debit cards are much more let's say user friendly. Actually, Raj and I were talking about the other day around how just how it's changed. I think when I was growing up, and credit cards was very much the norm. I think, what was your story, right? You had mentioned something.
Oh, I mean, I think it's mainly just credit cards. It was the norm, but we all had. Look, what happens in B2C markets generally happens in B2B markets over time, and there's a whole generation of people burnt by credit cards, and whether we all knew someone who got bankrupt by them, couldn't control them, all those type of things. And what we're seeing now is that next generation, that institutionalized learnings of families are passing down, and the usage of debit cards is largely driven by younger generations. Maybe it's no access to credit, but they're also smart, and they're thinking, well, I'm going to use what I have as opposed to use what I don't have, and that is even seen in the Afterpays of the world, when they're using debit cards, they're just spreading out their spend, but there's no fees or fines and all those type of things. So what we're seeing is this movement in debit cards is going to pass on throughout the economy, increasingly so in businesses and things like that, because it starts in B2C and ends up in B2B. But just seeing the pandemic and the cash use down, and that's partly replaced by debit cards. But my favorite was I had a friend pre-COVID, and every time we went out, we was always like pay cash. And then post-COVID, we finally got caught up again and went for lunch, and he said, "Oh, I'll pay." Okay. And how'd you pay? And crypto. he's completely moved from cash to crypto. And the idea is he just doesn't like anyone knowing what he's spending on. So he feels like crypto, no one knows what he's spending on. So it's therefore his safety secure. I don't know. That's not necessarily true, but it was still instantaneous. It wasn't NPP, which was much more secure, but he just said it was more opaque and he likes that in his lifestyle. So yeah, that's interesting. So
I like it. I like it. I think, in, MasterCards has done quite a lot of studies in the last year or so around, I guess, the impact of the pandemic. And one that they did in Australia was that was sort of polling Australians and how their payment card usage, and they came up with some stat like 71% had responded that they now have more access to ways that they can pay than they did like pre-pandemic. And I guess Australians and funny enough New Zealanders as well, I think we're known to be quite maybe not tech savvy, but early adopters of technology and different types of technology, and payments is definitely not different to, in any way any different. So I think, where people want to be, I think the infrastructure's there. Actually, next, if you just jump to the next slide, Raj, what's happening now around the world is like I say, there was not a lot of investment historically around payments. I think you guys are probably, aware, if you made a payment, if you made it on a Friday evening, it didn't, because people weren't working on the weekends. At the banks, those payments would actually really start to move until Monday morning, and I guess the governments have seen that there's really, in order to get ahead of the game, they had to, but from a global scale perspective, there was a need to move to, I guess, a more efficient way of clearing and settling payments. The banking systems, again, were getting more complex, more regulated. But alongside that, you've got cloud technologies sort of driving and enabling, I guess, smaller, more nimble, neobanks and I guess fintechs to start to build and create layers of technology on top of the existing banking infrastructure that was outstripping and outdoing these. So they had to kind of go away and start to think about how they did that. And what they did is, a few years back, obviously, is launch the new payments platform, which, like I say, may or may not be terminology you guys are aware of, but if you want to think of it, it's effectively rewiring of the rails underneath, I guess, Australian banking systems, and enables this instantaneous payments. There's no longer people used to meet in the bottom of Martin Place and swap discs to kind of like, to be like, that was a way of data transfer between banks up until, I hate to think how recent, but what it does is it creates this underlying infrastructure that will fundamentally change the way businesses and people get paid. And I guess as a consumer, probably many of you are aware around Pay ID. I can now send Raj that $20 I owe him just through his mobile number. I no longer need to even have BSB account. And he instantaneously gets a pop-up on his phone saying, "Hey, you've been paid." So that's part of the new tech. And Pay 2 was just launched more recently. And this will be a game changer for those, like I say, I mentioned before, around BEX. You issue, you send out your direct debits. You would then have to come in and check 2 or 3 days later, well, what ones have bounced, what ones have been declined because there's no cash. You're hitting and hoping that the merchants, your clients who you're direct debiting from, have their money in the account. With Pay 2, there's an ability to kind of take that money instantaneously, know whether there's money there. If it's not, obviously you can call. But this, alongside having open banking that's starting to open up, there's the ability to ping the account, work out, is there enough money even in this account before I actually try and take that authority. And so that will be funnily a big game changer. And like I mentioned before as well, there's fintechs working alongside all of this that are really unlocking and building on top of this. And Zepto is one that we're sort of working with around NPP, so enabling those payment methods that we're talking about there. DiviPay, who's a neighbour of ours at our office, they've built some great technology on top of the debit card rails to basically streamline the business expense management process, that a bit like what we're talking around the ordering of cakes, and having that kind of automated and dovetailing into accounting systems and banking systems. And then what Air Wallets has done is great result from a Australian Aussie fintech and enabling borderless payments. They're no longer God, how many times have been ripped off sending money overseas through traditional banking methods. It's just they've done some great things. So just onto the next one, like I say, around behaviours, it's that there has been a really big shift, and COVID has been a big driver of this. It was happening to a degree, but it's really accelerated it, like we've said, and it's one of those things that sometimes you need a push, or people need a push, and consumers are early adopters. But from a B2B sense, it's really helped drive some further adoption. And basically, this was again a different merchant MasterCard study, but it sort of was pulling out that 53% of merchants plan to expand their payment methods in 2022 as a result of the pandemic. And this might be outside of just simply taking standard bank transfer, or they might already offer some sort of credit card payment. But there's 60% said they want to plan to add QR codes, and 51% digital invoicing. Now, this is technology that's not, I wouldn't say in any way game breaking. It's not brand new. It's not cutting edge. QR to a degree sort of is, but we are more used to it as a result of all our check-ins, and effectively its ability to scan a QR code, have that then launch a hosted payments page on a mobile device, and have it pre-filled. It's a data-rich QR code. It's basically pre-filled with all the payment information, invoice information, the amounts. They effectively just have, if they've tokenized their card, they just have to hit save. Sometimes, if they don't, they might have to enter their card details. But it's effectively just new channels, enabling it and streamlining and making it easy for people to pay you. And so, I think that's a stat. Sorry, gosh.
Yeah, just with the pay now, like it's also pay now, but authorize now to authorize up front, give you details and let people store that and be able to charge them as you need to, and then solve all the other problems that go along. So it's upfront with trust, transparency built into that.
100%, absolutely. And like I say, that pay now link is technology we've got. We can do that quite easily for everyone today, but it is a game changer in terms of, if someone sees this bright orange button, or whatever color you wish to have it, hey, go and, please pay us. And you just click here. It's just, I know with my own kids' school fees, I'm continually getting chased up because there is no easy method for me. I have to log in every month. There's no direct debit capability. I'd be more than happy to give them my card for payments, but it's just, it's hard, and I forget. It just happens. So in terms of part 3, delivering this optimized payment experience, we've got sort of 3 examples here. It's something you kind of find it hard to think that this was an innovation at the time, but way back in, probably in the 1999, I think was when they applied for the patent for this. Was Amazon effectively, it was copywriting this one-click purchase. So what was that? It was, they were seeing this huge abandonment rate of their shopping carts. 70% is the stat, and they sort of said, well, how can we ensure that people they go through the whole shopping experience, they find what they want, they get to a shopping cart, and then they're just dropping out. It comes to the point to pay, and they're just falling away. Why is that? And I guess they went through their process, and it was a super painful process. It was not easy to pay, and every time they paid, they had to do it again, and there was no, it was a disincentive to kind of really commit to that purchase. In that point, it was easy just to go down to the store and go and get these things sometimes. So they effectively built this business process and patented it. It's just come off, so everyone's able to use it now. So that's great in 2017. But it was effectively, and there's nothing, like I say, game changing, but putting on one page the ability to capture all the relevant information you need to be able to kind of store and securely save that person's details, both delivery address, billing address, card details, tokenizing that so it was secure, so that when they came back next time, simply one click and it was done. They can reorder that, and they're away. And the uplift in sales, the reduction in card abandonment was astonishing, absolutely incredible. Raj and I talked a little bit about Afterpay.
Yeah,
it's a similar thing, right?
Exactly right. I mean, the abandonment rate is so like, if you have a physical store and people come into the shop to buy something, you have good salespeople to close the sales. You don't have that with digital. And so it's all about making the payment experience as seamless as possible. And that's why Afterpay was built, and its growth is purely that Australia has one of the highest card abandonment in the world. And it saw the problem and solved it by saying, well, we'll budget your spend out over a few payments. And abandonment rates fell substantially, and it scaled this huge global, billion-dollar business. It's absolutely, that experience has to be built into it, and we want to see that happen in B2B. I think Amazon with their AWS has actually replicated some of that stuff into AWS.
Yeah, absolutely. So the next one is maybe one that's not quite as obvious, but Netflix and their subscriptions. So recurring payments, I'm not sure if any of you have a recurring payments business. Again, doesn't need to be the same value, but just a recurring direct authority you need to be holding. You know, when I signed up for Netflix, it was super easy, but I got a first 1 month free. The second month, I got 50% off, I think, and then the third month, I actually decided I needed it on more devices. You know, it's on the TV, but I need to be able to watch it on my second and third device, and blah blah blah. And so I was able to kind of add and modify my subscription, and all of this seamlessly behind the scenes, updated and changed my billing. Now, historically, when I've done something like that with other subscriptions, I've been double billed. I've been dropped completely because they just failed to hold that subscription. But all of this was happening seamlessly behind the scenes. And then actually the other day, it came to a point where I needed to update my card details and for payments, and I updated my card details within 2 or 3 clicks. I had to go do this with a similar subscription service, and it took me about 5 or 10 minutes. I couldn't find it. I ended up having to call a customer service person. I had to provide them my card details, which is super insecure. I was pretty annoyed come the end of the process, and you know, it comes back to this point around it was just hard to pay. Now, albeit that was granted it was an updated change of details, but it can't be a hard process for people to do these things. Otherwise, they're not going to do it. People don't need an excuse or much of an excuse to not make a payment. So you have to make this every point, whether it's like taking that first payment or enabling that, changing your payment types or details, super easy. So that there's no, like I say, it's a bit about the abandonment, isn't it?
Yeah, but I mean, the thing about Netflix is, yes, the internet made the business scale phenomenally, but that experience of payment, it replaced going to the video store, paying for $6 or $5 or $4, if anyone remembers a video store, and you borrow a video and then you return it, hopefully on time. If not, you'll get a letter in the mail where you may or may not pay the fine. You'll definitely get a debt collection letter if you don't pay the fine. And it's painful and it was messy, and I didn't have a visibility of which videos I watched last week or what I'm doing or what my kids borrowed or watched and things like that. So it solved that by providing an experience payment end to end, where you sort of know what you have, you can upgrade, you can downgrade, you can do everything using the internet, using data, and that model, that transparency can be replicated into B2B worlds as well.
Yeah. Final example then is just a little bit backed up into Uber Eats, and this is one I found the other day. So it was, you know, when you sign up for Uber, you create an account, but that account is unified across all the Uber platforms and what they offer. So, you know, I have a Uber corporate account, which has our corporate spending card, but I also have a personal one. I can store multiple cards across multiple profiles, all accessible within the one application. And so it gives an ability for me to be able to, you know, easily change an order. Now, some of these things, ordering from Uber Eats and ordering an Uber these days is actually not cheaper than the alternative as you're going to the store or ordering a standard taxi. But I do it through that process because it's easier. It's significantly easier. And if we all remember how hard the old process of paying a taxi driver was, yeah. You know, up front, I've ordered a taxi and I've paid for it without, you know, and we just jump out at the end. There's no thought. I know that's also a danger because, you know, you get carried away, forget how much you're spending, but it's easy. I'm not fumbling around for cards. I'm not fumbling around for now. Some of these taxis, albeit have caught up, I think, with their own apps now. But the way they do this, but you know, I've entered my details once, and securely across all of their platforms, I'm able to use and purchase against those cards. So that's what I really like about them.
And all the other problems are solved. The tax invoices, all those B2B problems, it's all solved in one place, and the data flows from there.
Yep.
I'm just watching the time. So for too long, B2B payments have been characterized by distinct fragmented approaches where you have accounts receivable and accounts payable, two very distinct sort of operations, not necessarily talking to each other, and it's not working in a coordinated and streamlined manner. And where we see AR and AP working together, so we really want to see a collaborative approach between the two So between the two parts of the puzzle. So how are BigTech doing it? Just to summarize a lot of the stuff we're talking about, they're doing it through a few different ways. Everything works. Systems are integrated and automated. There's one system, and that's your ordering, your process, your actual flow of, if you're buying stock or ending stock or Netflix, everything works together. The payments experience is built in from start to end, and it's transparent and it's available. It can't be manual. You can't have this software talking to this software and someone in between the two things. Everything has to flow in a really seamless way. That's how BigTech are doing it. That's how they're getting paid upfront, before, or authorized and paid on the due date 0 days late. The data has to flow. It has to be instantaneous. It has to be one click, like Nick was talking about with Amazon. It has to be painless. And that goes back to the data. They're using data from multiple sources. I mean, something we probably didn't talk about enough, but they're segmenting their customers based on data with afterpays and things like that. They're looking into you and saying, okay, what size are you? What's your credit worthiness based on a whole heap of things? Which industry are you in? And then looking at making decisions really quickly using data, not someone going, oh, let's have a look at this. Or maybe we'll give them $5,000 credit limit. It's like, hey, instant, this is what we'll do. Your Facebook, unless you're dealing more than X amount, or Amazon Web Services, you cannot have an invoice. It has to be pre-auth. You have to authorize your credit card within these different limits, but you always, and you trust this, not because you have the transparency to see what you're spending. And that goes back to the systems being integrated and all. When you know exactly what you're spending, you have invoices, you have tools to reduce your prices. You go to Netflix, you can up, down your subscription as exactly as you want. So customers need to be segmented using the data, and then you have to be able to use that data in a real streamlined way. Well, one of the big things I think that I've been building on throughout this is the authorization up front. And at the bottom, you can see it's transparency and trust. It only works if you're really transparent about what you're doing, and you've built trust with the customer. And that trust doesn't have to necessarily be in the old school of going handshaking. It's trust through online platforms. And you capture data early on in the sales process. So right up front, you're really making it clear, this is how and when we'll charge you, and this is what we'll charge you for. It's not a confusion. It's not like, hey, here's a deal, but we're not sure. Everything is clear and upfront, straightforward, and there's data and ability to access that information. You just have to solve the accounts payable problems of invoices, or payments, of approvals upfront, not an afterthought. And it gives the customers control to end a direct debit, to seamlessly, like Nick said, change your credit card, change it, update it, things like that. I'm going to sort of go into how can you apply these learnings to your business? What can you do, and what can ezyCollect do to help you do that? There's a couple of 3 focus areas I wanted to dwell on just for 5 more minutes. I think we only got about 5 minutes left. Best practice onboarding, how you onboard customers, how you manage that risk, and that's largely around authorizations. And I'll talk about how ezyCollect does that, and build your relationship through that process. Introduce automation early in the process. So we really need automation across the whole way, from your stock, from your goods, from your services, from your supplies. Everything needs to be automated and integrated. And it eliminates risk of late payments, because there's no extra steps involved in your side, on their side. If more information is needed, it becomes complicated. It takes time, and it's more likely there'll be issues about late payments. And that goes back to seamless integrations as well. Make sure everything's integrated. One of the things we do with ezyCollect is we try to improve, it's either called credit applications or customer onboarding. We try to make sure you're using all the data, so you capture your customers' data up front, their details, their addresses, their trade references if that's necessary, and you make a quick decision. But on top of that, on that agreement of terms, of your terms, when a customer is really keen to do it, you ask for authorization up front. And one of the big things we're building in is authorization in your credit applications. Hey, you are probably a medium credit risk, automatically please send us your credit. The only way we'll deal with you is because you need to provide your authorizations. Doesn't mean you don't get terms. You could still apply terms, 30 days, or you may require upfront, but you have that authorization built in. You're checking their credit limits. You're doing those type of checks to make sure you're going to get paid 0 days late. That onboarding is, you have to choose the segments, and this goes back to your data pieces. Which customers are going to have these different types of direct debit authorities and payment terms, etc. So if they haven't got a prior payment history, maybe it's just a part and parcel, and this happened largely during COVID. A lot of businesses said, you know what, forget terms, everything has to be paid up front. It's changing a little bit again now, but they're saying, well, yeah, you know what, we just want to have your authority to take the money on the right time. But that only works if you have trust in the system. You have the data being shared. As part of it, you can see we have direct debit authorities built into ezyCollect now. So you can ask your customers at any point in time, please, set up a direct debit authority. In that process, you can make sure they apply for your service agreements as well. Like whatever your agreement is, whether it's your direct debit agreement, your customer terms, you get that agreement up front. So it's really clear, they have it, there's a policy agreed to, and that includes the payment terms. One of the other things we're focused on is the automation of payments, and we've built a lot of functionality. I'm not going to delve into each of them now, but it's largely around, once you have that authorization, how do you collect the money? You can schedule it, but you can auto collect it as soon as the invoice is raised. Where we want to see this go is, if it's we want to give that's what BigTech has, especially around subscriptions, around software services, and apply that to manufacturing, wholesales, retailing businesses, or mainly wholesale manufacturing, and give them that ability to do it. So if you receive your stock, you sign a piece of paper, and at that point in time, once you sign that, digitally sign, not obviously physically, and receive that goods, you will be charged for it, and it's understood, and that's clear, and you will, yeah, I got the stock, yep, I'm charged for it, and that's understandable, and that's fine. And lastly, just making sure it's all seamless. Every part of the process, the payment experience, linked in and oversight over whether it's working with your accounting software, your online ordering software, your stock management system, everything has to be integrated. We're focused at ezyCollect around the payments experience, but that has to integrate to your accounting platform, which is a source of truth. It has to be seamless and work. You have to solve all the problems for accounts payables by giving them the invoices that they need. They have to be able to view, dispute, make questions about those invoices in a really seamless way, if need be. The applications and things like that, and reordering as the end point as well. It's always easier to sell to an existing customer than sell to a new customer. Everyone knows this, so you need to really create a really trustworthy system that, hey, you don't have this painful ordering of cakes where no one knows where everything is. Hey, here's where we are on the invoice. We've authorized it. It will come out on this day, and we all agree on it. And if there's a pain point, there's credit card failure and those type of things happen, again, really seamless. Your credit applicate, you can't buy more goods until this issue is sorted. It's pretty simple, and everyone understands that. Oh, no issues, I'll get that fixed up. We're just going to end up. I saw the time. I've got a time note. What's coming? What's the future of B2B? Where is tech? And I'll just share a quick one. There's a saying, and this is from a Twitter feed, but it's quite, I've heard it a few times, is where if you want to know where B2B business will be in 10 years' time, you go today and you look at what Asian teens are doing. So you start there, and in 10 years' time will happen. And this has been proven out apparently over and over again with emojis, with Slack, with TikTok, and it just ends up at B2B at some point in time. And so we sort of sat there, and we always try to look into the future. And Nick and I were saying, what's happening in the world? I mean, I know this isn't in Asian teams, but integrated payments was big a few years ago, where you're paying things within apps, within TikTok, within WhatsApp, within YouTube. You click a button while you're watching a video, and suddenly you've got a set of information, or you paid for something. My favorite one is shoppertainment. I don't know if anyone's heard much about this. I haven't used it a huge amount, but it's sort of a bit of fun where when you're shopping online, you end up being entertained as well. Like you're clicking on cakes or getting reward points, or you're gamifying it in some meaningful way. So that's quite popular, especially around in Asia at the moment, and when you're on your online shopping portals.
It's also what you're just going to say, right? Like where we're trying to look and take some of this is around the gamification of rewarding and getting, say, your customers paying earlier. So if they pay earlier, there's some kind of reward and, like, say, gamification of that process. Because let me say, ultimately, if someone can get paid earlier, then albeit that's a great result. And as jokes aside, Raj and I are starting up our TikTok, so we'd all love it if you guys follow us in the coming months. Yeah.
I was going to say with TikTok, especially the data in B2B, my niece was getting braces, and she knew every fact about braces, not from any sort of research or thing. It was her dentist's TikTok account, and she knew which color to get, what benefits and pros and cons of different options are. It's quite amazing. But and anyway, so the big one which we see that's going to affect B2B worlds in the next 10 years is, and this is a bet, no one knows what's going to happen in 10 years, but it's a tokenization. In the gaming culture, in whatever type of game, there's a tokenization of value within those games, whether it's for tools, for goods to buy, to make, to create in the virtual world. That tokenization is going to replicate itself throughout. And you see it with crypto, and it's becoming more and more mainstream, but it's going to see itself into B2B worlds where when we think through what an invoice is, it's a contract. It's an agreement on receivables, payables, terms, payment, delivery of goods. All these things are easily entered into a contract. That contract is tokenized and can be on-sold and can be valued and can be financed and all those type of things. So that's where we as ezyCollect as a business are pushing ourselves forward towards. It starts with little steps like authorizations and agreements and all integrations, but it is working towards this sort of really smart contract, which we've had webinars on before and we'll have more in the future. But that's sort of, that comes from that culture of, you know, tokenizing everything. Cool. That's the 45 minutes. So if you want to get in touch, our email addresses are there. Feel free to reach out anytime. We run monthly webinars to bring you to the latest AI and latest insights. Let us know what you'd like to learn in the next webinar. So just fill out the survey and we'll make sure we send you everyone an email of the recording today.
And that's the topic, I think, for the next one. Unfortunately, you won't have Raj and myself hosting and taking on that journey, but far better hosts AJ and Beth. So the guys over there at Hampers Bite, one of our great customers, is joining us on that one. They're talking about managing the seasonality. They like saying with Hampers, it's obviously have a great period around Christmas time, but how do they manage that over the other months of the year? Brilliant.
Any questions, just type it in. But thank you everybody for today.
Brilliant. Thanks, guys.